If you are a shorter term time horizon, I can't really help you because I think that's a very, very difficult thing to do in crypto markets. Some of my all-time favorite traders and investors, kind of legends of the industry, who are very big into crypto, so I'll never trade it. Even though these guys were famous for trading, they're like, buy and hold works much easier, it's much less stressful, and you don't get caught out with a massive volatility. Why are the markets puking? Why is everybody gripped with fear?
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. Let's join Raoul Powell in a conversation about these topics and more.
You see, what's been happening is we have needed stimulus into the global economy because the economy's been slow. The ISM survey has been bumping along the bottom. China's slow, Europe's slow. And you see, one of the component parts that allows for this all to move hadn't really been playing ball. Firstly, it was US rates, but the Fed gave us that signal. So that started moving. But the big one is King Dollar. The dollar has been strong, and a strong dollar is a tighter financial conditions, which doesn't help markets and doesn't help economies. You see, at this point in the cycle, when there's no inflation, or inflation is falling fast, generally you need a weaker dollar. That brings global growth. So if you remember, Janet Yellen went to China twice earlier in the year. Those conversations, I believe, were about how we can allow China to stimulate without sacrificing the yuan. You see, if China had stimulated with the dollar strong, the yuan would have collapsed, and they can't deal with that. They really want to keep their currency stable. So they will have said to the US, we get it, we need to stimulate, we've got a debt deflation going on, but we can't stimulate, you need to help us. And Yellen would have said, of course, what can I do? And the answer is, well, obviously you need to cut rates. And that's like, yes, we understand that. That's on the cards. But then it's like, you must weaken the dollar. So cut to the Bank of Japan. The Bank of Japan is the big player in all of this. And the Bank of Japan had been suffering from a weaker and weaker yen and the stronger and stronger dollar, and had started to make noises that it wanted to do something about it. So the Japanese banking market is the Eurodollar market. It's the global lending of dollars, really comes out of Japan. And Japan didn't really have enough dollars. So what they had to do, the world doesn't have enough dollars. So Yellen will have spoken to the Japanese, as will have Powell, and the idea is this, listen, you intervene in the currency, that's injecting of liquidity. Help us start lowering the dollar. You can be the big driver here because this is how you operate your currency system. We will reciprocate by cutting rates, and the Chinese will be able to stimulate their economy without losing control of their currency. That's something I wrote about for a while, and I've talked about that this was the big plan. Now, how long will that take? Usually, it takes a week, 2 weeks, 3 weeks, sometimes 4 weeks. We've got the added complication of what's going to happen in the Middle East. I don't know the answer to that. But anyway, these are the kind of factors we're playing with. And I think of them as spasms. These are short-term macro things that don't affect the view. You see, something like this can be really problematic if the business cycle peaked and we're on the way down. That's what tends to exacerbate slowdowns. If the business cycle is rising, driven by liquidity and financial conditions, which is what it has been, and I'll show you some stuff on this in a sec, then these tend to be short, sharp corrections, a pause that refreshes, a kind of resetting of leverage in the system that allows the markets to recover, and often very sharply because it's followed by liquidity. You see, when the cycle's falling, it usually means inflation's too high, and therefore they can't inject liquidity and don't want to. But this is the reverse, right? So this is actually a magic setup.
Bitcoin's recent decline shows similarities to the 2016 post-halving dip before the 2017 bull run, says Peter Brandt. Veteran trader Peter Brandt notes that Bitcoin's decline since the April 2024 halving is similar to the 2016 halving period, which led to the 2017 bull run. In 2016, Bitcoin halved on July 9, falling 27% from $650 to $474, before skyrocketing to $20,000 in December 2017. Bitcoin's recent slump below $50,000 represents a 26% decline from the post-halving price of $64,962. Some analysts warn of potential further declines. On August 5, Bitcoin dropped to $49,221, but signs of recovery were noted as it reclaimed $56,000 by August 6. HCC crypto founder Benjamin Cowan and Chirp CEO Tim Kraftanowski suggest a pattern mirroring 2019 and the possibility of a swift recovery, as seen in 2020, due to macroeconomic factors.
Now, the business cycle, remember I said, well, the business cycle is bottoming and not peaking. I know there's a lot of noise about recession. A lot of that was priced in back in 2022 from the forward-looking indicators. What we've got is the cyclical elements of the economy, car sales and stuff that are slow, miners and stuff that are driven by the business cycle. The business cycle is still chopping. Now, people say, yeah, but look, it rolled down. Yes, it did roll down. It happens at every low of every cycle. You tend to have this correction. And that's where we are now. So you can see the last 2 decades worth, you get this secondary dip before you get the recovery. So that's where I think we are now. It's kind of noise because most of the markets I concentrate on, crypto and technology, are priced off liquidity conditions and financial conditions. But we are at the relatively slow point of the economy where rate cuts are now kind of preordained, and the things that back it up are things like unemployment. I've been talking for a while that unemployment should rise. I don't think it's going to go super crazy, but now we're at the point where we're beyond the unemployment rate of the most negative Fed member. So obviously the signal is there to cut rates, and the Fed have made that clear. Maybe they come sooner, maybe they don't, maybe they inject liquidity in different ways. But either way, unemployment has been rising, and that is a key factor for the Fed, and inflation has been falling, which is the key factor for the Fed. So it's green lights all round to cut rates, and cut rates allows liquidity to come in to the system.
Elon Musk's recent meme on social media has sparked speculation about his involvement with Bitcoin during a market crash. Musk shared a meme with the phrase, "Hard times create strong men. Strong men create good times. Good times create weak men. Weak men create hard times, with you or here, next to weak men in hard times." Prominent trader Willy Woo suggested Musk might be stacking Bitcoin, adding to the speculation, although Musk remained silent. Bitcoin dropped from $61,000 to $49,670, recovering slightly to $52,600, marking an 18% drop in 24 hours. Bitcoin has lost 25.5% over a few days, falling from $70,000, with the market turning bearish. The crypto community is on edge, watching Musk and other influencers for market direction. Bitcoin recovers to $55,700 after significant losses, sparking debate on market direction. Bitcoin trading at $55,700 in the European session, up from a low of $49,000, showing signs of recovery. Crypto market capitalization reached $1.98 trillion, up 11.3% in 24 hours, but still down 17% over the week. RSI attempts to move out of the oversold zone, touching the 50-week moving average, indicating potential bullish signals. Pessimists point to previous volatility spikes leading to long sell-offs, suggesting caution. CoinShares reports a $528 million outflow from crypto funds, including $400 million from Bitcoin and $146 million from Ethereum. CoinGlass data shows $1.10 billion in liquidations on August 5, with $813 million from long positions. Michael van de Poppe suggests the day could define a crisis start or a V-shaped recovery. Jump Crypto's large new ETH sale on Lido may have contributed to the market dump. Donald Trump suggests Bitcoin could help address the U.S. national debt, now over $35 trillion. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoinzilla for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.